beer subject, and we'll move on to some trading. So welcome in. Let's jump in, share my screen. Before I do that, let me not give you all my account info. All right, perfect. So let's jump in. We'll try to keep it short today. I had a couple questions. Instead of trying to answer everything in chat, I figure it would be just easier to make a video. And then if anybody wants to actually join, which a good handful of you did, so welcome. All right, let's jump into this and I'm glad a bunch of you guys go jump in on a 2 o'clock on a Tuesday afternoon. But we'll keep it short. Let's take a quick look at the markets. Nothing new or extraordinary. We talked about this the other day, but we ran up. Markets ran up. We ran up to the 200-day moving average and this downtrend channel line. We smacked it, and that was the end of that. So we've sold off since then. PSAR, reversal signal here on the 19th. You can see MACD was tipping over back here anyway, so it was just setting up for it. Squeeze had just started to tail off here as well. You can see stochastic momentum, or the STOMO here, just completely diving down through the 40. CCI also driving down here from well overbought territory. So nothing positive on the markets yet, until we get down here and start some basing and then try to move up. We could maybe see something along these lines. I don't know. Do we come back to this 50? I have no idea. And it doesn't really matter. If you look at this little spot over here, this is the beginning of June high, late May high in it. We smashed through that. So that level is meaningless now. Maybe the 50 holds some magic. We'll see. These Bollinger Bands are getting short. So will we crash through the Bollinger Bands? It's not very likely that happens. So taking a look somewhere in this 40-24 range, maybe 4,100, it'll hold up in here. I don't know, but right now, I'm not expecting a giant bounce or rally. If we can break back above this 21 EMA, the green here, maybe we start another leg, move higher. If not, maybe we move up and then we sell off more. My take is that we're coming back down into the 3,000s handle here. So 37, 38, 39, somewhere in there is probably where we're headed. Will we break this previous low? Don't know. Now, I'm not convinced we will. Not convinced we won't yet. On the Russell, same type of thing, tipping over here a bit. So same thing, doesn't look any different, but we're back to this high, bouncing around in this area. Maybe we'll get a little support in there somewhere. So we'll see what happens, but is nothing telling us that we're stopped here. So, Igor just pointed it out, MACD, it hasn't started to even base out yet and then tip up. I got stochastics and RSI. Those need to level out down here and start to turn. So we haven't seen MACD change its momentum yet and head to the black. And squeeze, if we keep pounding down here, may likely trigger a sell signal like it did here. I don't know if it'll be that long of a sell signal. Maybe it won't be that bad. But all of these things need to base out in oversold territory. So until then, I don't see any reason to be ultra positive about the markets and where we're going. NASDAQ looks like the exact same situation here. So no differences there. Let's take a quick look at some of the positions and some charts on positions. Oil. So we're in oil. We have a couple trades in oil right now, and can't really bounce back and forth between two accounts super easy, but we'll look at it. But in oil, we have a put. So we sold the put here. Make sure everybody's got their mute on. So if you can, make sure you're muted, just so we don't get all kinds of background noise. But look at oil here. We sold the 65 put. It's not even in the picture here. So we sold that 65 put. We're sitting at a 48.7% return on that put right now. So I'm going to guess that any day, probably by tomorrow, maybe tonight, overnight, who knows, that we'll close out of that put for a 50% winner. So that put is in good shape. And then we also have a strangle on for November to 85 days out in oil. And that thing's sitting up here at 133, which is the high. And then way down below, you know, at the 60 is the bottom put on that. So you got the 133 call, 60 put. That thing's at like a 9% return in a couple days so far. PSAR signal though did reverse on oil, so that happened today on this pop higher, and you could see it was building. Squeeze momentum had been changing. You're coming off of the oversold here. In fact, this was pretty much a trigger in here, came back down, swung higher, CCI moving higher. All of those things just telling you that oil was going to go positive, and it has. Gold. So we're also in gold with a couple trades. Right now, we've got two strangles in gold. So we've got a 64-day, which is the 1600 put. So we got the 1600 and the 2035 up in here. So that's fine. And again, why a strangle in gold? Well, you've come, look at this MAC, the squeeze and the MACD. They both gave up their momentum. They've crossed negative. Squeeze hasn't yet, but it might. Who knows? But you've got the STOMO in oversold territory that may come up. So a little conflicting signals here. PSAR is still telling you we're going down. We're not ready to reverse, but we're getting closer. We've got some support in here. You're right on the Bollinger Band. That will usually provide a range for us. We don't usually, you're not going to crack the Bollinger Band hard. So great place for a strangle. Look how tight this is getting. It's going to pop one way or the other soon. It may head into a little squeeze period here and then pop up or down. We don't care because we are strangled, and both of those strangles are currently winners. So both gold strangles doing well, and this is all going to relate to something in a minute here. So hopefully you can just bear with me on where we are. There's some stuff in chat here. There's a couple of people couldn't hear well enough.
No,
but hopefully you can hear me. And again, just make sure you guys are.
Sounds all good.
Yep. So Igor says sounds good. Alan's good. So if you guys can hear me, we're all good. If not, it's recorded. Hopefully when you play it back, you can hear it, the sound. All right, so there's our gold positions. We talked about a little bit of everything. Let's look at a couple of quick stock positions. Don't love stocks, but I just couldn't help myself. But as always, you get a little excited on some things and then put on a trade and back. So we've got a couple stock positions. Let's run through those quickly. So AbbVie here, we put on a put spread, which was the 135, 130 put spread. That was looking great when PSAR was positive and when MACD was moving higher and squeeze looked like it was moving and everything was moving. And then all of a sudden it's tipped over. Today, PSAR signaled a bearish signal, and who knows where we're going. I'm not, I'll stick to my mechanics on AbbVie. It's down a couple $100, a big deal. They're sized appropriately to take a full 2x loss and not be a big deal to me. So 50% winner, 2x loss, $135 is the short strike. We're still a little ways away. Bollinger Band's tightening up. We'll see where we end up with AbbVie. Just a pretty good down day on AbbVie, but big deal, small trade. Not a big deal. Didn't sell my house to buy this thing. All right, Adobe. Quickly check that one out. So Adobe, we actually got into this thing as a put. Broken wing butterfly. So we were betting on a bearish move in Adobe, and the bearish move on Adobe. Let's see if I can pop some marks in here. We bought the 395 as our. That's our long is right in here. Let's see if I can actually make it. I can't really do it. So the 395, like close to in here, was the long. Then we sold the 405. it's going to be hard to depict it, but I'll show that one here. Was our short strikes, and then our 395. We did it on the 425 was the other piece. So, all right, so bought the 425 in here, and sold the 405, and then bought the 395 down here. And we are in the fat part of this butterfly right now. It's 10 days. If we stay right here, it's going to be beautiful. Right now, we're up 56% as of right now on this trade. So it's a 56% winner. If it blows through here, great. We're going to still, we sold this thing, or we bought it for $4.80. The width of these two strikes here is 10. So we wouldn't have 100% return if we keep blowing down through here. I don't know. We'll see. We get to 50 here, but we're nowhere near bottoming, and it could get worse. So that looks good on Adobe. So that one's fine. Then we have Amgen. On Amgen, we did a strangle. Let's see. I'm checking. Yep. Okay. Good. So, can anyone tell me, by looking at this chart, why I could potentially have chosen a strangle on Amgen? Don't do that. And this is the reason. This thing's just been trading in this channel. Yeah, range bound. So Rod and Joshua, they win the crocheted bicycles. Fantastic. We've been stuck in this channel for a while. We've been stuck in this channel for a while. There's, I don't know which channel you want to pick. There's a couple different channels on this sucker, no matter which ones you pick. So we got a small channel here and a little bit larger channel outside of it. Just been range bound, stuck in this channel. And we sold the 280, which is, we can't even see it on here. So let's see, we sold this 280 call, and then we sold the 210 put down here. Okay, this channel's way inside there. We probably could have even gotten tighter on this thing, but there was no reason to do that. We're up 25% on this thing in 15 days in the trade. So there's Amgen, and that's why we got into that trade. All right, so it gives you a little insight on Amgen. I'm going to try to go faster. All right, CAT is another one. So CAT, what did we do on CAT? Yesterday, we sold a bear call spread. We sold the 210, and then we sold the 205, which is right at the 200. So we sold the 205, bought the 210 in here. And why did we do that? Well, here's a couple of reasons. Number one, we had a PSR reversal yesterday. Now it's back up here, so who knows what's going to happen now. But that was number one. Number two, you had this RSI and stochastics moving down. You also had MACD moving lower. You've had the squeeze momentum coming out. You've got a breakdown here in Stomo. You got the CCI that was breaking lower. So yeah, it popped a little bit today. It bounced off this 21 EMA. If it continues and it wants to move up here, then fine, we'll close it at a 2x loss. If it moves in the direction that we anticipate, we'll have a 50% winner. That's the plan on that one. Google, another one that we went short on 4 days ago. This was a put broken wing butterfly on Google. So we bought the 117 up in here. So we bought the 117, we sold the 113, and then we bought the 111 down here. So right now we're sitting at 114 in here. We're almost at the dead center of our broken wing butterfly. This is up 60% in 4 days. If you want to get on, it's usually a 12-day, 13-day, this was a 14-day trade. So do you want to wait 14 days to make 100%, or do you want to wait 4 days to make 60%? So it's possible to close this sucker out today, maybe. and take a 60% winner. No reason not to do that because I could technically put another trade on and I have a better return on that. NVIDIA, we're in this thing with a 112 trade. And yeah, Igor, yeah, absolutely. Say no more, book it. And book the 60% winner, the 55% winner in 4 days. Why wait? I mean, you can hit a home run or you can hit a double. And that's right now, it's a pretty good double. It's not a single anymore. That'd be like a 25%. So 50% winner, double. All right, NVIDIA, we have a 112 in this trade. We have the 140 down here as our naked puts. And then we have the 160, 165 in here. So we are still above our put debit spread, or I'm sorry, yeah, our put debit spread. And we're well above the support here, or the low here is where our naked puts are. So feel pretty good about this. Can it drop farther? It can. Not worried about it. And NVIDIA right now, if NVIDIA comes down here to 140, you get a chance to buy it or to own it at 140 and wheel it or whatever you like. Not a fan of wheeling, but you can do it. All right, and then 2 last trades for you, and let's get into why we're here today. So we are in Tesla. We did also a bear call spread in Tesla. Why did we do a bear call spread in Tesla? And considering that this trade is only 1 day old, so we did it yesterday. And why would we do it yesterday? Well, I'll tell you why we did it yesterday, because we were breaking down to the 21 EMA here. MACD had just ticked positive a day or negative a couple days ago. Squeeze, the momentum is coming all out of this sucker. You're driving down lower on both of the STOMO and CCI indicators. That puts me in a pretty good shape. Yes, there's a stock split that's coming up on, what is it, Thursday. We're going to run up into the stock split. Dude, we've been running up into the stock split all of this time. Okay, now people realize that it's not going to run up a whole lot more. So I think we'll just trade in here. We got the 200. We got some resistance up here. We got Bollinger Bands tightening on this thing. And when it touches, the dot touches the candle, typically the next day we can reverse, or that same day we can reverse. I thought it would have happened yesterday. It didn't happen to me, but I'm still happy with this trade. We're a little bit red on it, but not a big deal on Tesla. But we sold the 960, which is way up in here. So we sold the 960 and the 970, and bought the 970. So that's where we are up in here, which is above our resistance. So if we start to creep up into there, we'll close it out for a 2x loss, or we'll get our 50% winner. One of those things will happen. And the last one is today's big mover on the day. I like UNH. It's been up here. I know Anya's been talking about UNH as well. He likes it. We've been in this trade for a week now, for 8 days. So when you go back 8 trading sessions from here, we're right about here. This is where I got long with a call broken wing butterfly, super low risk trade, high reward, and anticipating that this bounce off of the 21, it would move higher. This was setting up nicely, breaking higher on the STOMO. Looked like it had been reversing here on the squeeze. Everything was ticking up. It was looking fantastic. Lost right up to new all-time highs. And then today, the bottom fell out of it and it dropped down. It's not a big deal to me. It's a broken wing butterfly, and I could care less if we lose the whole doggone thing. It's going to cost me like $300. So it's got 3 days left. So my question is, I'm down like a 60% lose. I'm down $182. Now I can bail on it, or I can wait and see if this market picks up and reverses, or if the market tanks. If the market starts to tank, it might move. If it doesn't move, well, see what happens tomorrow. If it worsens, maybe we'll just bail out for like a 1x loss instead of a 2x. But there's where we are on UNH. And let's switch gears on it. So it gives you a sense of where some of the stocks are. And some of the things I wanted to talk about today briefly today because I had a couple questions, and this is probably this is probably a first world problem for some people, but when you've got an account that's getting bigger in size, it gets harder to try to maintain your theta, a good theta value. You really got to, invest in more stuff and more stuff and more stuff to create more theta. So there was two questions today, and the first question was on
Discover watches of Switzerland.
Delta.
Over 50.
Hang on, we gotta play the whack-a-mole thing here. I think we got everybody muted just about. So, all right. So the first thing here is, how do you get some negative delta into your account? And this is what we're taking a look at today. So if you look at all the way over here to the right, the second column to the right is my delta. So my beta weighted deltas in this account. So we'll get into where we get some negative delta. So overall, this account is slightly negative in delta, not where it was, because we've come down a bit, and that's changed the deltas that we have. But let's take a look. Well, this is that Clorox put. This puts almost at a 50% winner, so we're just not there. We might even close this winner out while we're on here today, but we got a 50% winner here. Yeah, it's got an 11 delta on that call that we're in, and it's positive because we sold a put, and that's going to give us positive delta. However, we also have a strangle. This strangle is giving us negative, some negative delta. Why has it given us some negative delta? Well, this thing has dropped a bit from its original, so that my deltas are a little bit lower. And if you look at the two strikes here, this call, okay, the delta on this call has changed a bit. So the call is what's given me more negative delta than the positive delta from selling that put to selling that call. So overall, not a huge deal, but you've got a big theta trade here. Well, 33 theta on that one, and a -7 delta. Strangles are perfect. I said it in January that this is going to be the year of the strangle, and I'll be damned if it isn't the year of the strangle, because when you've got a two-sided market, or at least a slightly down market, and it's not just ripping new highs every day, you have the opportunity to now start to play both sides. So the year of the strangle is in full swing. It's still August. There's still time. Okay, but strangles are beautiful because they give you great theta. Okay? And this is one trade giving me 33 theta. So every day I make $33 on this trade every single day. And from a buying power standpoint, it didn't use a ton of buying power. In fact, the buying power on this strangle was $4,000. So $4,000 in buying power for a trade that was going to be, and we've been in this trade for 11 days, and it doesn't expire for 85 more days. So, $33 a day for 90 days is pretty good cash. So we'll take it. We're not waiting that long, we're waiting until 50% winner, but there's one way to get negative delta into your account and positive theta, and good positive theta at that. Then you jump into ES. So when you look at ES here, overall, these are very positive theta trades that are sitting in this account, but I've got some negative delta in my ES account. Why do I have some negative delta in this account? It's really tough for you to probably make heads or tails of all of these trades that are in there, but most of these trades are 112 trades or BA 112 trades. That's what's in here. And then there's 3 strangles that are in, but not in this one. The strangles are in the other trade. So how am I getting some negative deltas here? Easiest thing to do is I look at the days open, and let's group some trades. So this one overlaps because this same strike is in a couple different trades. But when you're looking at these trades here, this naked put that's way down here, that's almost nothing. So that's giving me, there's almost no delta on that one at all. So there's no delta on that one. I've got some positive delta because I sold this strike, but this strike is double up for a couple things. Probably a bad example here. So this, because this one's expiring in 3 days, there's almost no delta effect left on it. So it's not really doing much of anything. And then there's not much of a theta effect left on this thing because all the theta, it's all come out. So this, we sold it for 5.25. It's worth 5 cents. Okay, we sold it for 15.69. It's worth 8 cents. We sold it for 57. It's worth 8 cents. There's no theta left in this sucker to begin with. If we take a look at another trade, let's group these 43 DTE trade. So here's another 112, and this one's expiring on Friday as well. So we got this one expiring Friday. A lot of stuff coming off Friday. And again, another, almost no theta left. There's almost no decay left in this thing. And from a delta standpoint, we don't have anything here to speak of. So it's not really adding or subtracting delta. So let's just skip to where do we see some bigger effects on some things. And that's this August 26th, which I believe the 3870. What the heck trade is this? 3870, 3945. I'll find it in a second here. I think this is and it's hard to keep up with all of these trades. Oh, there it is. So this is, we have two. Oh, this is a, yeah. So this is a 113 trade, of which that 3,500 is the other piece of that trade that's sitting in here. So we've got this really wide top to 3870, 3945. That's a big wide mouth on this thing, and there's 3 shorts here. This is giving me some decent negative delta. Why? It's expiring Friday. I've got like very little theta left, but there's some. Okay, but it's giving me some, overall, this trade's not doing much of anything on the theta side, but on the delta side, 3945 still has some delta in it. Because we could still tap this thing by Friday. So there's still some delta left in this thing. So it's giving me some negative delta on that one. So a couple of these 112s are leaning that direction. If we look at this one here, look at the 12 days. If we can pull this one up, this September 9th one. If you look at this one, it's a little bit of negative delta on this 221 because these upper strikes on this move lower have given me, because we've bought them, is a long put. We've got negative delta on the long put. Well, the closer we get to this long put, the more value it has, the higher that delta is going to be. And it's going to be higher delta than obviously the one that's 50 points lower. And this put, is decaying. And we're 17 days away. But when you take a look at these things, you've got negative delta in here. So as you drop slowly, you gain some negative delta on these trades. So there's where I'm getting some of my negative delta from, is these upper strikes of some of these particular trades that are in here, because I'm getting, because we've dropped and we've gotten close to this, so it's getting closer to the money. So this put is gaining more value. It's increasing my negative delta. So even as I drop, it actually is giving me a little negative delta. And then let's take a quick look at these ES trades. And I'm missing, yeah. Eddie's telling me my trade that I can't even find. Thank you, Ed. All right, and I decided to put on, I usually stick to 3 strangles. I got a little crazy and I put 4 on. 1 expired yesterday, so I'm back to 3. I might put a fourth one on, but primarily these strangles that are in here, when you're taking a look at these strangles are giving me really good theta, and the delta's, it's a little bit off on this one. Let's take a look at another one here. Let's look at the 33, 20, 47, so let's look at this one. A little bit of positive in here because the puts, because we've sunk down, so these sold puts have a little bit more delta in them than they previously did. But it's essentially more of a neutral-ish trade. So they're not adding a whole lot of delta to me. So I'm not too worried about these. I don't mind them. I don't mind having that, these strangles are neutral trades. So there's 3 more strangles. Let's keep going. Gold, 2 strangles in gold. Okay, there's my theta. I'm getting $44 a day on these things and almost 0 delta. Okay, so they're not adding or subtracting. They're just a neutral trade, not adding delta to my portfolio. I don't have these long deltas. That's why I'm slightly negative right now, primarily because some of the ES trades, the 112s, have come down. That's one of the reasons. I'm going to show you the big reason in a minute. Gold strangles. NASDAQ. Okay, I sold a put here. That puts a little bit under, but we're fine on it. And then I have a 112 trade in here. Now this one's giving me quite a bit of positive delta and quite a bit of positive theta. So because I sold this put is what's driving the delta on this one up. So the the 112, almost nothing, but I get the most decay and the most delta out of this one naked put. I really do like selling some of these naked puts in NASDAQ because you can get so far away on it. Doesn't mean they can't get hit. Then here's another strangle, so yet another strangle. So this goes back to Eddie, your piece is all my strangles are not in ES. A lot of my strangles are in, you got 1 right now in oil, you've got 2 in gold, you've got 3 in ES, you've got a 4th one here in on the NASDAQ. This is a nice winner. It's got very little positive delta, so it's a pretty neutral trade. 42 day, $42 a day in theta, great stuff. RTY, got a 112 that has almost no delta because they're pretty delta neutral until they start to move. When they start to move towards this long put, then they start to add more negative deltas, which helps your portfolio overall. So it gives you negative delta as the portfolio drops, which usually doesn't happen. Usually you get positive delta as your portfolio drops. So the 112 acts as a kind of counter delta trade as you drop, if you drop slowly. So I got a little bit of theta, I got no delta in a 112. And then let's go here and, oh, what do we see? Yet another strangle. So you got this strangle here and then a 112 trade. This strangle here is negative in delta because this call has really, we've sold off on this call after I put this on. But this is 29 days in this trade. And so this has been on for quite a while. Look how close we're $1.60. Oh, I'm sorry, $1.62 from closing. So $1.62. How soon will we get there? Maybe a couple more days at this rate. This thing was going to close. So this strangle will come off, but it's giving me some negative delta right now because we're a pretty good distance away from this put. We're getting closer to this call. The closer we get to the call, the more this is going to change a bit. So we need the market to drop for this call to not be pushed, which is giving us this negative delta. So overall, good theta, negative delta, benefit of a strangle there. AbbVie, we already covered. Adobe, we covered. Amgen is another strangle. So the Amgen, no delta, positive theta, fantastic trade. I don't know if it's fantastic yet. We haven't won anything. We're up a whole 37 cents on that thing. Cat's down. Google, Nvidia's a 112. very little theta, or a little bit of theta, nice theta, a little bit of delta here, not too worried. Now, this is where we picked up a lot of negative delta in this trade. So if I'm and I'm doing these because I want to add negative delta. So what I've added here are two butterflies. They're hedges. I'm expecting to lose them. I will be okay losing the whole ball of wax here. So what am I going to lose on this particular trade? Well, right now it's, let's see, what did we put this one on for? I can tell you each one. So the one that's expiring first, this 3,600. So this one down here, it's at a slight credit, but it's basically going to lose. We spent $7.40. So I will lose $740 on this trade. Okay. So when you look at these, I'm losing $740, but I gave myself good negative delta because I'm hedging a down move in this. Did we get the down move? Not to the extent that this was going to help with, so not a big deal. If we take a quick look at where we are on these, okay, here's this one. Okay, it's way down here. It's got no hope. I'm just letting this thing expire. I'll lose $740. I don't care, okay, because I bought a hedge. It didn't pay off. It gave me negative delta, which helped my overall portfolio for a while we started to fall, but then we didn't fall far enough. However, there's another one of these on. So let's take a look at the second one. Okay. Oh, look at that one. Okay, so on this particular one, let's go back. It's on the second one. We spent $15.30 on this trade, which is now at 2470 credit. Okay, so 2470 credit on this one, and okay, right now that is a 30% winner. So we're dropping down into here. Okay, is it helping us right now with our deltas? Take a look at this. 215 plus 703 is 915 minus 855. That's about a $60 in delta, negative deltas, which is about what we have here. This one's like gone. Okay, I get 60 negative deltas on this trade, but I had to pay for it. I mean, I paid good money to get into this trade. Okay, am I willing to lose $1,500 on this trade? Yeah, I am. Right now, am I losing it? No. Right now, okay, I'm making $500. So I'm actually up $500 in this trade so far, and I am in the tent. If you think we're going lower, I'm sticking there. If we start to reverse out on this thing, I may close it off. We'll see. But I have 10 days on this butterfly. So I did pay for negative delta. So the question of how do you add some negative delta? Well, there's one way. 112s will add some negative delta as the market starts to fall towards that top strike. Strangles will add almost none, but you get a little bit of delta help with it. They're never going to hurt you. They're pretty neutral, but you get a little bit of delta help. I put this on to give me the most, that's 65 delta on my SPX trades. Now SPY, these are just two naked puts. Obviously, those are going to give you nothing but positive delta and some theta on those. And then Tesla is another negative delta trade because it is a bear call spread on Tesla. A little bit of a loser, but it's giving me right now, it was a winner yesterday, loser today, maybe winner tomorrow. Who knows on that one, but it's also giving me nice negative delta. So if my portfolio is currently 23 negative, has 23 negative deltas in it, I'm well within my plus or minus range. So what would you do on Tesla? Do you get rid of Tesla because you're losing it, or do you keep Tesla because it's giving me some negative delta in my portfolio and it's acting as a little bit of a hedge? Okay, hedges are meant to lose money, except when you need them the most. So I put this one on. We'll see what happens if Tesla wants to rocket back up to 960, we'll figure it out from there. If not, we'll let this thing go. But right now, Tesla's giving us negative delta. And then that UNH trade that's now a loser, that was a winner every single day until today, is giving us some positive, and it's also hurting mine. I tell you that. So hopefully that gives you a sense of where my deltas are coming from. Do I want a negative delta trade? Well, you can do a lot of different things to get negative delta. But the thing I like the most is I like some of these butterfly trades in SPX. I could also add something in ES as well. You know, what could you do? Where would you do it? What do you think? If you're looking at a chart of ES and I want negative delta, you know, there's a lot of different trades, but if you think that 200 that's at 4,300 is going to hang, and it's going to hang for at least a couple of weeks, you know, I could go out here and I could sell something up in that 4,300 range here, and I can give myself some negative deltas here as well. I can add, you know, so I could sell a call spread in that. I can do a butterfly in SPX. I mean, you guys can type in chat, I'm sure, if you want. There's a million ways to add negative delta to your portfolio. I like to add negative delta while I'm adding some degree of theta in many cases, but you can't, it's not easy to do unless you're selling, you know, call spreads. So most of the time for me, I'm just buying a butterfly or something along those lines. Now you can do also, you know, along the Gabe lines of things, you know, I can come up with some SPX trades to add some negative delta. I don't really care about 1 day negative delta. It doesn't really, you know, it's gone in here and gone in a day. So it's a very directional trade. But you could pick something out a little bit longer. We could go 31 days, and we could probably put some kind of a, you know, something on down around the 20 delta, or you could probably do it quicker than me here and figure something out. But I like to just doodle with it. So let's just figure it's 30. So let's go 60 above that thing or something along this. So now I'm getting some pretty nice negative delta on this trade. Now I can go and take a look at a negative delta trade on this one. Let's see what this looks like. Okay, so here's another negative delta trade that you can put on. So you can drop this broken wing butterfly. Now, I'm paying $660 to do it. And then you can fuss around with it, and you can, you know, maybe I don't want to pay $660. I just want to pay, you know, I'm okay losing $200 to make $750 if we run through it, or make some more. So here's, you know, I like playing with these things and just playing with the width of them. So this is a little bit of a broken wing butterfly where I'm paying $2.60 or $260 to put this on. If we sink it all into here, we start getting inside the 10th. And if we blow through this amount and keep dropping over 30 days, can we hit, what is this, 39.40? So can we hit 39.40 in 30 days? We can. That is just below that 50-day moving average that we had. So can we get there? We can. And when I looked at it here, we're just outside the expected move. Maybe I move these things up a bit so that I put that center strike on the expected move. Now I'm paying 75 cents. Let's take a look at it. It's a stupid trade now, but okay, we moved it higher. So this is a little bit higher. Let's play around. Yeah, I think we'll leave it there. Man, you can spend $4 here to make $1,000 if we drop, and this is not a big drop here. It's 39.75. This is exactly the expected move. So we put that center strike on the expected move. That's the main part of this tent. So this is the expected move in here. We're inside. We don't need to get to the expected move to make money on this. And that would put us in the tent and making us the most money, which could potentially put us at like a $4,000 winner. I don't ever think that we're going to spin it. But here's a nice hedge. Not too expensive. Well, again, relatively speaking, you can do it in ES or SPY or something else. But it's a $400 hedge. It gives me the ability to make $1,000 if we drop to the expected move or lower. Okay, not even the expected move. All we got to do is get to 39.75, which would be the same move we've had over the next 3 days. We just need that same size move over the next 30 days, and we're in here. So you can play with these. It's kind of one of the fun things about, Tasty Trade is being able to adjust these things and figure out, how can I make some more money? What can I do? How can I change it around to make some more money? You can do all kinds of stuff. Now, this would not be a good trade, but you get the point. So I can make all kinds of different, scenarios out of this thing and change it. You can do this in one as well. And one day I will join one. I know it's haunting Igor that I'm not in there. So I'll get there. Yeah. So as soon as I do that, it'll be probably a game changer. I'll probably double my income. Anyway, all right. So here we go. But you can play around with these things. I do agree. I think one's a fantastic tool, and I believe if you're a serious trader, you got to be in it. Obviously, I'm probably not even a serious trader. So figure out different ways that you can play with these broken wing butterflies down in here and adjust them around, and you can figure out exactly how you want that to happen. You can do a symmetrical one like this as well. So this is going to give you 60 down and 60 up. So it's a symmetrical butterfly in here as well. This thing's going to cost you $260. Thanks for buying me the subscription. But all I got to do is get inside the tent. I don't have to be in this tent. I just got to be inside this curve somewhere in a short period of time in the next couple of days or so. So if we could sell off, put me in here, and then again, this is giving me nice negative delta. Okay, you just want the tent. Just want the tent. Get me in the tent. Put me in here. Okay, or get me inside this theoretical bubble here, which is even nicer than that tent. Theoretical bubble. Okay, that looks even more exciting to be inside the theoretical zone than it does inside the tent. Okay, but if I want the tent, give yourself a wide butterfly as well, and now you can move it around. Okay, so I can move this butterfly, change the shape of what you want to do. Not equally moving my strikes, which is stupid, but anyway, you get the point. So these are some ways to put some negative deltas into your portfolio and figure out what you want to do on it. There's a really nice one there. So you want to make $30,000 the hard way, there you go. You can also lose 20,000 in the meantime, but it gives you a good sense of what you can do with deltas. So my suggestion is I'm trying to add theta is I'm adding strangles. So as you saw, I have a lot of strangles on. There are 1, 2, 3, 4, 5, 6 strangles, not including my 3 ES strangles. So you want more theta in your account. You don't want to modify your deltas, get more strangles on. It's the year of the strangle. The other thing that's helping me a bit too, and this is my last thing because I got to run, is a couple of these 112s. So there's one expiring on the 7th. Okay, so this is expiring on the 7th. Here's my 112 that I have on. And you can see that I added this additional 2 calls. So I added these calls at a later time. Those calls are almost worthless now. I could probably take them off if I want to reduce risk exposure to it. They already gave me the money. So I've already made the money on those calls by putting those on. In fact, Who would not close these right now? So I put these on to turn this into a strangle 112, and the calls are selling for 20 cents. I don't know. Let's just put a bid in and we'll see what happens. It's at 25 right now. Okay, you can take those calls off. Is there? And then I have another one here at 4,600. This one has gone from $3. So I put these strangle calls on. They're not giving me much help on the, on the delta. They were giving me great delta help. Now they're, not giving me much at all. They're not going to help me much. And the theta is all but burned out of them. So yeah, let's close these out. I'm just putting in a bid. We'll see what happens today. So there's two of them, and there's one more out there sitting 23rd and the 16th. Oh, it's in this series here. So here's another one. Okay, this one, it's not quite worthless yet, but I added this, for the exact same as the put, I added the call just about. Gave me a pretty nice overall. I still have some nice delta there. It's $1.20. Why take it off right now? Is the market going to rally 500 points in 31 days? Maybe. I don't know. But right now it's not. So I'm not touching that one. These I'll do because they're pennies on the dollar. So I'll look to take those off. So why not take those things off now for less than $1, or less than 50 cents even? All right, so there's at least some ideas, but those calls gave me a lot more income because I sold those calls for $9, $3, $4. So I'm going to make an additional, I don't know, 9, 3, 4, almost $20 times like 6 contracts. So it's going to give me $600 or something like that additional. So I made $600 by putting the call on, doing that. So there's at least some ideas today. Give yourself something to think about. Hopefully this was helpful to you when we take a look at where we are. And I'm looking at my overall, portfolio here. This is a lot of spec trades. I very rarely have ever had this many spec trades on, but the account's getting bigger. So the account's getting bigger, and you got to put on some more trades to not use up all my buying power, but I got to put enough trades on to create enough theta now to generate the same 3% a month that I want. So I got all these trades that I have on right now in it. And I've started adding some of those SPY puts because I wanted to add some more theta without being involved in individual stocks. So I'm copying Igor essentially on these, but I don't want to be in individual stocks, and I don't want to be in futures any more than I already am, because that span margin is going to kick my butt at some point. So I want to slowly wean myself into more of these and a few less of these spec trade things that are generating some money. And I got a lot of these big ass hedges on. There's a lot of these things rocking and rolling right now. There's two put flies in here, and then the rest of these hedges might be too many, but I really thought we were overbought, and I really think that we could drop at least to 4,000, maybe 3,900, maybe even 3,700 in the next month. So that's why these things are all on, to give me some of that cushion that if we go down, we could start getting a couple of these to pay off. And when these things pay off, I mean, I pay 50 cents here. I'll answer that position sizing question in a minute. These things pay off. Sometimes they pay off big. I make some 10, 20,000% returns on a couple of these things because I close them for like $5 or $50. If this thing gets in the strangle or in the put spread here, that's a 50 wide put spread. That's a $2,500 deal. If I sell this thing, if I spent $25 and make $2,500 on it, which we've done a couple times this year, if we do that, that's a nice little bonus. Not a perfect hedge, I know, Don't write me letters about the fact that it's not a true hedge. I get it, but it helps me if we sell off a bit on it. And then you can see some craziness on the 112s as I started selling calls when we were overbought. Now we're back to maybe not quite an overbought stage. I won't sell calls anymore. I may say the put. Also, you'll notice on this one, when I sold this one, I did not sell that call for a week. I sold this one. Okay, so that it took a week to do that on it. So as you truck through these things and you get an idea, and this one here, I bought it. I sold the 112 on 720. I didn't add the put until 8/1. Okay, you don't have to be added right away. I added it as when we moved up, sold my call, and now I'm closing them today for like 50 cents, 30 cents, 20 cents, something along those lines. All right, the last question of the day, and I got to fly because I need this room. Last question of the day was, why don't I adjust my position sizing? Well, my position sizing is getting pretty doggone big for some of these positions, and the notional is pretty significant on futures. I'm just trying to keep a balance between notional, and I don't want to overdo my futures, which I got a lot of futures exposure. Most people that would see that would probably choke and lecture me. I get it. It's too big. I'm fine letting it drop a bit. It's a little too much overall, but I'm just trying to enhance. I think 0 DTE is a good way to do it if you have the ability to trade 0 DTE. It's a way to add some additional cash without position sizing. I just don't want to, on ES, the next thing up from ES is SPY, and SPY doesn't give me the return. That's the problem you have, is SPY won't give you the leverage that futures does. And I don't want to really double my futures exposure from where it is. I don't want any more futures. I'm maxed on futures. I won't add another futures trade until more come off. I will add SPY or something else. I shouldn't say all futures, but I don't want more ES futures. Okay, they're nice until they're not. Okay, but the leverage is so fantastic. I can't get that leverage even with PM. So even with portfolio margin, I can't get anywhere near it with SPY. Definitely, and you can't trade SPX because that is the death of all products. So I'm not doing 112s on it or anything like that. I'm not trading anything that size that big. So I really can't double my size of ES because the exposure is just too great. It's too crazy. And I really can't get what I want out of SPY. So you're really at a crossroads. The best way for me to do it is I'm adding other futures like gold, other futures. Yes, RTY is somewhat correlated. I think bonds is another one that you can take a look at. You can trade ZB and do it. I think ZB is one that's worth taking a look at if you want to sell. It's a little trickier to do. You could do silver, you could do gold, you can do oil. So you can find other futures to potentially trade. Energy, Oxy, maybe you could sell some. Oxy I think is going to the moon, so I didn't want to sell strangles on it. But energy, it's got filled on one of those ES calls. Got filled on another one. What's the market doing that's getting us filled on stuff? I guess it's doing nothing. So there's the long and short of it. XLE and XOP and some of those, I think you can sell strangles there. But I think your best way to do it is get yourself some strangles in some other underlyings and use that to bulk up your theta exposure without adding more ES when you get to a certain size. If I double my size from here, and I'm kind of on the path to do that every 2 years or every year and a half, or something like that. If every 2 years, every 3 years, I double my size, then I may look to increase it at that point when I can handle it. All right, I got to run. I got a meeting, and I hope this was helpful to you guys. We'll post it in the chat, and you can put it on at night when you want to go to bed or something like that. So good stuff. thank you guys for jumping in here. 28 people at 2 o'clock on a Tuesday. Good stuff. Glad to see it. Happy to be able to do it with you guys. Enjoy a great rest of your day, everybody. Catch you later.